We began this evening with the economic crisis. Stocks plunged at the end of the day in response to fears that the financial crisis is intensifying. The Dow Jones Industrial Average dropped 7.3%, falling below the 9,000 mark for the first time since 2003. General Motors sank to its lowest value in 58 years, losing $2.15 to close at $4.76 per share. In all, $900 billion was wiped off the value of U.S. equities. As one analyst told Bloomberg News, people have lost faith in everything. We're dealing with an investment community of atheists right now. Valuations no longer matter. Today's losses come after a series of emergency measures, including coordinated efforts by central bankers to cut interest rates. Secretary of the Treasury Henry Paulson suggests the Treasury Department is considering buying stakes in troubled banks by the end of the month. Joining me now is Paul Volker. He served as chairman of the Federal Reserve from 1979 to 1987. He is known for raising interest rates to historic highs in order to combat rising inflation. This move ultimately steered the economy into a prolonged period of growth. Earlier this week, he commented on the current financial crisis, saying, quote, "The earth has moved and the system is reorganizing itself under great pressure." He has been said by one Fed historian to be the last god of central banking still standing. I am pleased to have him here. He is about to leave, and the opportunity to talk with him is something that I've wanted to do very much. So I am pleased to have him here. I don't have any fancy questions. I just want to know how you see the world that we're going through and what we have to do.
Well, I think it's clear that this crisis is at a rather critical point. Up or down, over, where are we going? And it's reached a point, you see it in the stock market, obviously, the figures that you reflected, but it's more important what's going on in the credit markets, where the arteries of credit are pretty well clogged up in many cases, and that reflects back on the economy. The economy, kind of surprisingly, has escaped any great damage until now, but it's quite, except for the housing, obviously. But it's quite clear, I think, we're going to be in a recession. State and local governments are hurting. Financially, they're going to have trouble. So I think we're at a critical point. But what strikes me when I sit back a little bit and try to look at this is, I think finally we have the tools in place potentially for dealing with this. There's some very extraordinary measures taken over a period of time. You step back and look at where we are now, I think governments have the tools to deal with this. Now, what am I talking about? Yesterday we had a drop of central bank rates of, I don't know how many central banks, but
I think there were 5 or 6, including the People's Bank of China, including Bank of England.
It was pretty much across the board,
European Union
reflects an understanding which was not here a few weeks ago, that this is an international problem. There's a lot of schadenfreude in Europe about the United States. No more, because their banks are in trouble. And they've come to the conclusion they want to work together. And of course, they're in Washington. And I think maybe the most important single thing there is every one of these countries, these important developed countries, have said, one way or another, we're going to protect the principal international banks that are in our country. And those banks are the backbone of the system. And it's pretty clear they're going to be protected. Secretary Paulson made that pretty clear in terms of the United States. The British acted yesterday with a lot of money. Other countries have acted. Belgium, Holland, French talk about putting money in. So that's going to be done. In the United States, the other banks, the FDIC is there. We raised the deposit limit. There's a lot of source for some confidence there. We have the $700 billion package, which is available for putting capital into banks to the extent it's needed, and Secretary Paulson emphasized that yesterday. It's available for helping to liquefy the mortgage market. Fannie Mae and Freddie Mac are able to buy some more mortgages. The Federal Reserve's taken action to get the commercial paper market, which is coming to a standstill, moving. We've got guarantees for money market funds. And maybe one of the most important things kind of hidden in public is clearing up the clearance and settlement and so-called netting arrangements for these credit default swaps.
Right.
Only out there in $60 trillion that were out there. This is really important because it eats up money, it eats up collateral, and you can't clear it up overnight. But they're working on it. So I think we have the tools, and if we get the leadership and get together and push internationally, we ought to be able to deal with this. You know, I don't like to see all this intervention. It's disturbing that we had to do it, but we have to do it. The tools are there. And let's get this thing settled and keep the recession as limited as we can do it, and then we're going to have to rebuild the system.
Why hasn't any confidence come back? I mean, all these tools are in place. Yet you saw what happened to the market today, and there is no credit. Nobody is lending, and even interbank, no lending, because they don't trust that that bank may go insolvent.
That's right, and that's what, you know, deal number one for the big banks,
exactly.
as I mentioned. Why?
We've had these measures.
Yeah, but
we know they're out there.
This problem is bigger than we imagine generally when it started. And it's been dealt with piecemeal. I don't say that critically, but it's been dealt with. Bear Stearns was taken care of, and the Fannie Mae and Freddie Mac were taken care of. Then they thought goodbye with Lehman, and then AIG goes, and then Morgan Stanley and
Goldman Sachs
had to take action. And coming out, and then there's a big fight in Congress about the so-called bailout plan, which wasn't confidence building. So the way all these things came out, it looked like, in a way, nobody was in charge. Nobody had a full panoply of measures. So the point I'm making is that they are really there.
Yeah, they are now there. I mean, it looked like they were going from emergency to emergency,
right, exactly.
and putting your hand in the dike here and there, rather than having a plan to deal with the problem in its entirety.
We need the plan. The tools are there for the plan, putting it together. And putting it together in an international context, I think, is a plus.
Okay, let me talk about what you mean there. I mean,